Welcome back. This is Chili Davis, and I want to welcome all my new viewers. Welcome if this is your first time viewing my content, and I just want to talk about top stocks that are performing in my portfolio. And today's subtopic is about buying on the weakness and understanding your entry point. So the top stock we have overall gainer right now is ticker symbol AMC or AMC Entertainment Holdings. And as you can see, we're up 424%. So if I was a believer in AMC, that the stock is going to go to 70, I would go ahead and start adding to my position so that I could increase my gains. My next ticker symbol that we have down today is HMHC, or Hewitt Mifflin Harcourt Company. Is down 1.1%. As you can see, I'm up over 258%. So again, there's some weakness there. I would add to the position there. Next ticker symbol we have is EMAN, or Imagine Corporation, is down 3% on the day. And you want to go ahead and add to that position. As you can see, that will improve once the stock goes back up on a positive day, 3 or 4%, you can add to your overall gain. Next ticker symbol we have on weakness today is MGM. MGM Resorts International is down 0.5%. As you can see, I'm up over 81%. Look at a good one. Ticker symbol SFIX, or Stitch Fix, is down 0.94%, so almost down a percentage. So again, if you believe in this stock, you want to go ahead and add on a day like today. Ticker symbol RF, or Regions Financial Corporation, is down 0.39%. Now, the only part about banks is they don't tend to go up that rapidly. So you're not going to see, get back a 1% or 3% in a day with the bank. You're going to see like a 0.5%, maybe a percent move every now and then. So even if you buy in on a weakness, it may take you a few more days to gain enough where you would notice it. Overall, it's a pretty green day. Okay, we do have one down a bit. Himx Technologies, this is a chip company. They are down 4% on the day. Now, they had a pretty good week. Let me see here. HIMX stock. Let's see. HIMX. Okay. Himx Technology. This is good. They had a pretty good week. Says Himx Technology is a leading supplier in fabless semiconductor manufacturer headquartered in Tainan City, Taiwan, founded on June 12th of 2001. Okay, so if we look at the week, Himx Technology started up. Well, let's go back a few more days. Okay, so if you look at last Tuesday, June 22nd, the stock was trading $13. As you can see, it has steadily accelerated over the last week. So that is up more than 10% in a week. That's a pretty good gain from $13 up to $16. And as you can see, the 52-week high is $17. So yeah, if it dips, it'd be a good time to buy. But also, just looking at the stock overall, let's just look at it 6 months. So if we to draw a line through here, it's probably the weakest it could go is $10 per share. Let me go to another stockcharts.com. Let's do some more technical analysis. We're going to look at Himx Technologies. Okay, so as you can see, here's the bottom. This is where it has a red candle. Let's take a look. The weekly still going to probably be about $13, $12, but let's see here. Okay, now the weekly shows an up candle. It's ready to increase, but the daily shows a falling candle. So I'd guesstimate this stock can fall anywhere from 15 down to $13 per share. And if you look at the relative strength index and you look at it over the past few months, you can see that, you know, the stock is trading around $13. That's where it's coming out of. So yeah, I would say you could buy some now, but I would still say if you really want to get into Himx, build a good solid position, wait for it to come down to $13 per share. So that's just my estimation. But if you want to, you know, start your position today and you don't have a position, being down 4% is pretty good. See, we have ticker symbol Peloton. Peloton, the home gym machine is down 1%. So that may be a good time to add to your position. Let's see, okay. Palantir Technology, this is a data play. It's down $24 per share. Ticker symbol PLTR. This last week, I believe it saw heights as far as $27 per share. So we do know Palantir has the power to boost. So I would keep my eye on there. So this is a stock to jump on. Ticker symbol OLN is down 1.61%. Nvidia is down. Okay, here's the first time we're seeing one of these stocks take a hit. Nvidia is down 7.38%. As you see, I'm up overall 5.34%. So not that much. So this probably be a good time for me to add to that position. But I still want more data points. You know, I bought my shares in Nvidia, and I think I still want to know how the stock behaves. So Monday, Tuesday was the first, well, actually Wednesday was the first day of trading. So we don't know. You don't want to necessarily load up. DD Global is under investigation. Again, that's just ways stuff happens in China. Just mysteriously, a company becomes under investigation. And right now, new people cannot log into the app. So it's DD is the global Chinese Uber. It is just like Uber in China, where they actually do ride share and they do food delivery. But if you're a long-term holder of DD, being down to 7%, it'd be a good time to jump on. But I just don't want to add more. I just want to get a feeling of it. I never forget Snap's first earnings call. It didn't go well, just to say the least. Now, Snap came out trading out of IPO around $12 or $14. Let's just take a look at Snap. I remember when Snap went public 2 years ago, and it was kind of sad the way they came out. So Snap, let's see, okay. So yeah, it came out about $20, but then you seen it fall to you seen it fall as low as $11 per share. So, you know, that took a lot of wind out of people's sails. People say, oh no, this is a dud. Well, you have to understand, each quarter that this company presents, they get better and better. So just because the first quarter came out, like that first earnings call, I was like, I don't even know what they're doing. The guy, CEO Spiegel, I thought this was a lost cause. I mean, the guy's pretty young, and it wasn't experienced, you know, CEO of a prior company. So the earnings call sounded weak, and it didn't seem like they had any, future revenue opportunities. So as you can see, for 2018, 2019, 2020, the stock really didn't go anywhere. It traded from $20 at the peak of its opening down to as low as $4.99 per share. Then it started finding its footing that second year and started climbing. Now, once the stock starts climbing, I mean, legitimately climbing. See, this first year is like the calibration year. It's like, okay, what are they going to do if we throw this at them? What are they going to do if we throw this at them? People were comparing Snap to Facebook and saying they couldn't beat Instagram, that, they couldn't have better products. Well, they found better products. They found better services. And eventually they put it together. Analysts were happy after about a year. They found their footing, but it sank as low as $5.95 per share. So just remember that I always talk about IPOs. You have to take your time with them. You can't just rush in. I mean, it's great. Even if you bought in at, let's say $22, and then you averaged in, bought some more at 14, you would have just had to wait time. You had to wait about a year and a half for them to find their footing. So never just charge into a stock. I'll give you one that I'm in. I'm upside down in it, just like a bad car loan. Let me show you, because this is what happens when you rush into a new IPO stock. Let's see here. Let me show you here. Okay. Don't see. It's ticker symbol RKT. So let's look at this stock that I lost the most money on so far. RKT. Let's see. Okay. RKT. I'm down 29%. And I've got over 40 shares of RKT. Now, what happened with RKT is it got really hot, part of the Wall Street Bets crew. And Rocket Mortgage is definitely a good company. It's been around for years, since 1985. But they haven't found their footing yet. So let me show you. The stock came in at 25, it dropped, and then it spiked. It actually spiked to 40 something per share. This chart doesn't do justice, but this stock spiked to $43 per share. So people thought that the price of the stock's value was actually $20 per share. Well, it's not. The actual mean price is like $20 per share. That's the actual mean price. Now it's looking like the mean price is getting lower and lower, but what I have to do to fix this position in my portfolios to break even is I have to buy 40 shares of Rocket. So I have to buy back 40 shares of RKT. And that's the way to fix this 30% being down. So I have to dollar cost average in, and that would bring this back to zero. So that's just a strategy. If you, which I believe long-term in a Rocket Mortgage, they're just not be able to come up with the numbers right now. And then again, this is exactly what's happening to Didi right now, investigating Rocket. So again, whenever a stock comes out, and even though their books looks completely correct, and there's all this expectation, again, they have investors too. They have investors that have been holding the stock before they went public. And if they feel like they were misled, then they call up their lawyers and say, hey, guess what? You told me when a stock goes public that, the true value of these shares are actually, let's say $60 per share. And then it charged up to $43 a share, and then it fell back. So now you have people that can jump in and say, I was misled. I thought the shares were worth XYZ. Well, you just have to let companies work through all that. Eventually they will have the numbers, and this is what you have to look at. Forecast. You have to go to CNN Money and type in the ticker, RKT in this case, and you have to find out what the analysts are saying about the stock. So 14 analysts say at a 12-month forecast of rocket companies is actually $26 per share. Another 14 analysts say the stock price target is $20 per share. And then another 12 estimate the share price is $14 per share. I'd never believe in the worst estimate. That's just not true. But the stocks can be worth $20 per share. That's pretty evident. The company's been around since 1985. The CEO and the chairperson decided to bring the company public again. So they have a different set of investors and set of numbers they have to prove each quarter of why the company is worth more and more and different products and services they're offering. Now, right now they're facing a lawsuit, but that has nothing to do with the actual value of the company. Each company has revenue, they have assets. Let's see. Looks like last reporting date, September 8th, they have $3 billion in sales. And 50 cents per share earnings. So anyway, this is just why you're seeing the stock trade at $18 per share. Like I said, they're getting investigated. And let's just Rocket alert shareholder firm Sucrose investigate Rocket Mortgage for potential security violations and breach of fiduciary duty. Rocket companies tumble 11% on May 5th after a closed loan origination fell quarter. The company's securities between February 25th and May 21. If you currently, okay, again, this goes just back to, like I said, people come out of the woodwork when you open if you put the company on the public stock market, and they figure some kind of way they were misled. The investors who purchased the shares between February 25th and May 5th, they're encouraged to contact this law firm. So, like I said, lawsuits are going to come. You bring a company public, they're going to come. So anyway, that's Rocket Mortgage. I just wanted to talk about, how you can be upside down on a company. And then another company that I believe is undervalued is SoFi. SoFi stock was trading around $22 per share. And let's take a look. And they've only been out for a few months. So let's say June 1st, they went public. Excuse me, June 2nd at $23 per share. And if you look at what SoFi offers, SoFi is an American online personal finance company, a mobile first based in San Francisco, provides a suite of financial products, student loan refinancing, mortgages, personal loans, credit card, investing, and banking through the mobile app. So the 52-week high is $28 and the 52-week low is $10. So you're actually getting a bargain of this stock. But what each new company has to do is prove every quarter that they're worth what they're worth. So they have to go through the analysts. Like I said, we just went on CNN Money, and you can look at the forecast. And each quarter, that calibrates the company. So if they say, let's say this quarter they do $3 billion, the next quarter they have to do let's say 3.1 billion. And then they have to improve on revenue, and then they have to improve on margins. So if they're selling products and services for $10 and the margin on it is $2, each quarter they have to improve. So that product they're selling, let's just say, for example, the product they're selling is $8 wholesale value, and then they're selling it for $10, that $2 margin has to improve. So that's a basic business thing. It's all about revenue, increasing customers, increasing revenue. And then sometimes, of course, the analysts give you credit for increasing customers or just potential customers. So just keep in mind that this stock right now is saying 52-week high is $28. Yeah, I understand the stock has only been on the exchange at SoFi for a month. So you need to give them about 3 or 4 quarters to show why they're valued at $22 or $28 per share. And Anthony Noto is a very experienced person. He's been around for quite a few years. Anthony Noto is an American businessman, CEO of SoFi, previously Chief Operating Officer of Twitter, and previously he was a managing director at Goldman Sachs and CFO of the National Football League. So you're dealing with experience right here. So don't worry about the stock. If you're in SoFi, I believe it's the best buy right now. And it's just my humble opinion. Again, everything on this video is for educational purposes, and it's not a professional opinion. You should always seek your own financial advisor with any of the details or information in this video. But just in my humble opinion, this stock is worth way more than $28 per share, because the people on the leadership team and the CEO has over 20 years experience and knows quite a bit about lending and financing and how to build a company's balance sheet with assets and revenue and cash flows and those type of things. So that's just my opinion on SoFi. So just wanted to go over these few stocks that you can catch on weakness today, and just wanted to stir up your mind and just let you see the market as it is, and just look for value and opportunities, even though it's Friday. So I want to thank you for watching. Thank you for listening. And if you like this video, please give it a like. Also, please share with friends and family. And if you want to continue to get this content, click the notification bell. Thank you for watching, and have a great weekend.